you need to understand and have gone through it in order to build it in the first place.
Yes.
And that's where it helps to go with a reputable firm.
Very good.
The next one is, so after compliance, we go to capital. So capital, it's a funny thing, but the finance function needs to unlock value for the founders, for the shareholders. And if you don't understand what your company is worth today and where it can be in 3 to 4 years, it's very difficult on a different metric to really unlock value. Like value gets unlocked by increasing the value of the company. So you need a valuation. Every business needs a valuation. It's not about doing the transaction. You need to know what your company is worth and what can it be worth in 3 to 4 years' time. And you need to know what are the key drivers that's going to shift and move it.
Yes.
Then, on top of that, it would be very good to know what you would get out if you do close down the business today or if you do sell it. And that triggers questions like your own structure. How's the business structured? Do you have a holding company? Do you potentially own it in your personal name? Do you own it in a trust? Is it offshore? Is it in South Africa? And we take you on a journey just to understand, have you asked these questions and have somebody asked these questions for you? And is your structure in line with where you want to go and where you are currently? Most of the time, structures get implemented too late, and it diminishes the return, the value of the shareholder. And it's a very proactive way just to approach it and to think of it and to already increase value for the owner by setting up the right structures and understanding what type of mechanisms. If it's a business that's going to generate a lot of cash flow, you'll need to understand what are the impacts of dividends. And based on the existing structure, potentially compare it to another structure. If it is a scale up and they already know that in 3-4 years' time they want to exit, you need to understand what the capital gains tax would be, what that implication would be, potentially in what jurisdiction you want to have it. And is that already in a trust, or will it trigger estate duties or some other taxes down the line? So these type of questions need to be asked, and you need to consider that. Capital also speaks to just your cap table. Do you know who's on your cap table? Is there a way of either buying out, like with share buybacks, buying out some people on your cap table? Or do you want to add people to your cap table? So it speaks a lot to the actual capital, the balance sheet of your company.